Happy Monday morning, guys. Welcome to another Live with Real Estate Mindset. I have mvexler here. Thank you so much for joining us. We're really looking forward to doing this today. We have a lot of stuff to cover. I want you guys to know if you come back to this video, everything will be chaptered so you guys can go straight to the source. We're going to cover what's going on in the markets right now as far as the stock market, inflation, things like that. We're also going to have a mortgage update, and I'm going to show you guys and teach you guys about loan programs, pricing, and amortization schedule. We're also going to end, or our third segment is going to be on the housing market, and I'm going to show you guys how to use math to find the deal. And we're going to end getting an update from Mitch on all of the stuff that's going on with property taxes and ending property taxes. So before I begin, mvexler, good morning, sir. Thank you for joining me at 7 a.m. How are you today?
Good. I could use my cappuccino, but it will show up here sooner or later.
Yeah, I got my energy drink. It just hasn't kicked in yet. I wanted to just give some shout outs. Good morning to you, sir. Good morning, Les. P. Nice. This is my buddy. There's Fake. There's Vovo, also my buddy. Karen, what's going on, Karen? How are you? Good morning to each and every one of you. We really hope you guys are going to learn. Don't forget to go to the Empowerment Center. It's a real estate mindset website, free courses, free digital downloads, all of that type of stuff. There's my buddy, John Doe, sir. Good morning. Nice to see you. And Danny. Danny's been a big supporter. Nice to see you, Danny, as well. CT, good morning to you, CT. You guys, we're going to start right away. Mr. E, I got to say good morning to you as well. We're going to start right away, though, and we're going to go into our market update. Let me just do our first timestamp at 1 minute and 35 seconds. So let's start right here, and let me throw this up on the board. Now, Mitch, this is going to be crazy. At the end of this, I'm going to get Mitch's opinion on what's going to happen when the stock market opens. Now, you guys can see right here that the stock market ended Friday down substantially. When we go to futures this morning, Danny, oh my God, Danny, look at what Danny just did. Danny, thank you for your support. She gave 20 free memberships out, Mitch. Danny, I love you. Thank you so much. Happy Monday. I hope you're doing well. I hope you're learning lots. Danny, are you learning lots? Tell me in the comment section whether or not you're learning. It's important for me to know that you're learning, Danny. I really appreciate you. All right, so we're going to go and look at the futures. So the futures are starting out in the absolute gutter right here. You guys can see the S&P 500 down, Dow Jones down, NASDAQ, everything down right now future-wise. Now, what I want to show you guys, the VIX is open. The VIX is a volatility index. This is absolutely skyrocketing right here. It's crazy to fathom this. But the VIX right now, you guys, is up 12.33%. And I want you guys to know in 5 days, okay, so the volatility index in the last 5 days is up 39.13%. That's insane, Mitch. But the volatility index is all over the place, skyrocketing right now. But another thing that's skyrocketing is actually gold. Gold is almost at a new record high this morning. I think the last record high was on Friday, and it got up to $3,159 an ounce. Right now, it's about $10, little tiny bit less than $10 off the historical high. That is absolutely crazy, crazy, crazy stuff. Now, the 10-year, this is the 10-year treasury. A lot of the consumer-based debt and the interest rates that you and I can get as the mom and pops of the economy is off of this 10 years. So the fact that the 10-year is dropping right now 4 basis points means that interest rates should go down a tiny little bit for you and I. But really what we need to go down, obviously, guys, is the prices of things. Now, I wanted to give you guys a quick update on this right here. My God, this is the U.S. debt clock right here. They are adding so much data, it's making my head spin. But I wanted to point out real quick, the Doge clock is at about, according to them, they've saved the taxpayer $263 billion. When they divide that into taxpayers, they're saying that's a savings of $2,344. But another thing I wanted to point out that I found was interesting on this, because I went down to the bottom right here and I'm like, oh my God, look at all these stats they have. I don't know if this is accurate, guys. I'm not saying it's accurate, but what I am saying is this does exist. I thought this was interesting. It has U.S. bankruptcies right here showing a whopping, and I don't know if this is yearly or ongoing or when this data was accumulated, but they're saying, which is a surprising thing for me, 503,853 United States bankruptcies right now. So we got 500,000 bankruptcies according to the Doge clock right now. You guys can see that above my mouse that I'm circling right there. Now, under that, it's saying U.S. foreclosures is 95,000. So when did they start tracking foreclosures and bankruptcies on this? That's very interesting to me. Also, something that's horrible is the homelessness. They're saying that homeless right now, 705,000 people on the streets. 705 100,000 people on the streets right now. That is absolutely discouraging. Now, when it comes to inflation, let's take a look and see how the government is spending our money. And then you guys, unfortunately, they're not spending our money very well right now. Here's the deficit. This has not updated for March yet. This is to February. Now, remember, the fiscal year starts in October. So this is, I think, what, the first 5 months. So the first 5 months of the fiscal year, we have a deficit spending problem of 1.1 trillion. I wish it was billion, but it's not billion. It's freaking trillion. That means we are drowning in government debt. The debt to GDP ratio right now is about 135%. Let's see. Let's go back to this. It has it up here. Look at this. So, Mitch, we were talking about the debt to GDP the other day. It's 133.07%. I think we said it was 125 from the records we last had. But according to this, 133.07%. The government deficit is absolutely insane right now. Now, also, you call this, good call on this, Mitch. This is the overnight reverse repo. So this is more inflation. This is more liquidity. Essentially, the banks have too much money, maximum capacity, maximum leverage, all of those things. But this has been going up, and it's been going up since, let's see here, about last 2 weeks. So last 2 weeks, it's been going up, sitting at 286 billion. Now, remember, Mitch has said that this doesn't even matter anymore because it's just going to keep money flowing into this. So just when we thought, personally, just when I thought that this was going to end, it shot up again. But this got down to under $65 billion. You guys see that right there, kind of. In other words, you guys, unfortunately, there's still a ton of inflation, even though mom and pop like you and I are suffering and struggling right now, the banks are not. Now, let's look at the break-even inflation rate. This is also super depressing to look at because this means that interest rates are going to stay elevated because inflation is not going anywhere. The 5-year break-even inflation rate has been going up. Let me see if I can put this in the 1 year. So you guys see right here, it's been going up since, again, March 18th. So something happened. Maybe it was the tax returns. Hopefully it's tax returns. I don't know. But this has been shooting up. Now, you guys know that the Federal Reserve has a goal of inflation at 2%. We hit that right here. You guys see this low part, but we only hit it for August 2nd to about September, so about a month and a half. So out of the last, 3 years, we had a month and a half where the market's expectation met the Federal Reserve's goal. That's not good, you guys. Now, another thing that's not good is they are going to keep, well, it's actually good, but it hurts us. They're going to keep interest rates elevated. So you guys can see here, this is See Me Fed Watch. They're saying the next time the Federal Reserve meets, which is going to be May 7th, there's not going to be a rate cut. 81% likelihood, or 81% of the market thinks no rate cut. But when June comes, look at this, it's swift, that changes completely. So they're saying in June, yeah, we're going to need a rate cut. Only a 16% chance of keeping rates where they're at right now. So that's very, very interesting stuff here. Let me move on to our video. But first, I have a question for you, Mitch. And that question is, all right, and hopefully we'll be online by 8:30. So I want to go live until the market opens to see if you're accurate here. But what do you think is going to happen once the market opens and throughout the day? Do you think the market's going to rebound? Do you think it's going to stay down triple digits? What happens when the stock market opens, Mitch Vexler?
It'll have what's called a short squeeze, and it's just very temporary. My guess is it'll go up at the open, and within an hour, it'll reverse and at least double bottom where it just was, down 350, give or take.
Okay. All right. Well, we're gonna hold you to that.
Something of interest, so people understand. Doge, the value contributed by Doge is 0.0007% as compared to the U.S. national debt. Okay. The cost of the interest on the U.S. national debt vastly exceeds any of the savings of Doge. And one of the points that I try to make is that they're looking in the wrong spot. It's great that they're looking at the principal. It's great that they're looking at the fraud. They get it. But until they start hammering down on the actual fraud, as in the school district bond fraud of roughly 5 trillion, which can be wiped out with the stroke of a pen, until they get to that point, this clock is just going to keep doing what it's doing, which is going up. It's got to go in reverse. And the only way that can happen is by taking major chunks of the fraud out of the system immediately. And then mom and pop's money. So if they had 25 bucks and they invested it and it got levered by the school districts, and you said, well, my value went up. No, it didn't. It was never your value to begin with. Your 25 bucks was, but not the fraud. So getting rid of that fraud is going to be a necessity. That's my point of looking at that clock. When you understand what you're looking at, the cost of carry is moving so fast that no matter what Doge does, unless they start hacking away at the interest in the fraud itself, it will be for nothing.
So in other words, all they're doing is working with the expenses, which is important. Work on your expenses, but they're not talking about the elephant in the room, which is the debt that's already here. What are you going to do about the debt that's already here? Any workouts? They're not even doing that.
Yeah, they need to walk Morgan Stanley, Fidelity, Vanguard. They need to walk them in the White House and say, here's the deal. In the next 5 minutes, you're all going to agree to say yes, or by tomorrow morning, your companies will be gone. And the yes is we're going to wipe out 70% of all fraudulent bond debt effective immediately. Now we can start hacking away where it's got to be.
I think they should hire you to hack away. I mean, carefully, we don't want to be holding any chainsaws up. That's really polarizing and hurts people's feelings. But I have a comment here, Mitch. Truth futurist. I like that's interesting. And look at he's got a galactic profile picture. I wonder if he's been following the underground city, if you will, under the pyramid that they just found with the SAR technology. I wish we could talk about that. We don't have the show to talk. I love talking about that stuff. But Truth is thinking that what is happening right now is just a market correction, and right. So it's just a market correction. It's going to rebound. Do you agree with that sentiment? And why or why not?
No, it's what we're facing now is real. Yes, you can say that technicals are in play. There's no doubt about that. But the debt has gotten so large that the companies themselves, like if you look where NVIDIA was a month ago as to where it is now, you could make the argument that that's a technical correction. The problem was that the price to earnings ratio was simply so high, it didn't make any sense. And that's happening straight across the board on a lot of companies now. So what you will end up seeing, the downdraft, at least based on the math that we've run, and that doesn't mean it's etched in stone, it's just what we've done. But you're looking at a 30 to 40% downdraft here. And that's well past the idea of technicals. This is now down to fundamentals, which is, can a company make money and deliver a rate of return for the investors when you're looking at a 60, 70, 123 PE? And the answer is no, right? The standard would be 15, 17, 20 at the max with no more than 30% debt applicable to that company so that they can weather any storm. Well, there's so many companies out there that do not fit that mold. And frankly, that is exactly why Warren Buffett went to cash. He knows exactly what's coming and he's going to go shopping.
Before we move on to our mortgage segment, I threw up another comment here. Obviously, we hit a double top. You're warning everyone a double top. We can clearly see the double top right now. Do you think that what's happening? I mean, this is what CG Cap said. Nope, drip drop, dead cat bounce, the drip drop. So I guess what to say is the double peak really just a dead cat bounce where it's kind of like a bull trap. It goes up, fooling the market into purchasing stock, and then it's going to potentially free fall 30 to 40%. That 30 to 40% downgrade or decline that you're talking about, Mitch, how long do you think that's going to be spread out? Is that going to be only like a couple months, or is it more like the housing market where it could be years to recover?
The recovery coming off of what's about to happen, assuming that we're right, is going to be more than years. This is some serious stuff. Like when you have this amount of fraud in the system, you don't have any choice but to get rid of it, or the system itself implodes. So with regard to the market double topping, okay, but that was already based on NASDAQ, that was already 13% ago. That's how much the market's come down really since the beginning of the year. So that's NASDAQ. You always get uplifts. Like we'll probably have an uplift this morning. So it'll come off of 350. It'll probably come up to 200, but then it's going to slam back down again. And that's what the market does, right? The market's always looking for liquidity. So the big players induce the small players into taking positions thinking it's going up until it hits a certain point, which is a technical. And then that's when you see the footprint of the big players and you get an outside down bear bar. And that's when the smart players get in and say, okay, now we're going short. Well, that's pretty well what's going to happen this morning. Will it break below where it was like 3 hours ago? Nobody knows, but is it going to test it again? Yeah, it's a pretty safe bet. High probability.
And just one more thing. I'm sorry I said that twice, I think. No, but there's some good comments that kind of leads me into another discussion. So this is from Charger. This is from Rick. I'm just going to use his name in parentheses. And he made a couple more comments. But Rick's concern, and I think this is justifiable for most of the public to understand this. So Rick's concern is like a crash in asset prices is impossible, essentially because the central banks have so much power, or like the Federal Reserve has so much power, they can bail out, they can print. Do you agree with what he's saying, that the worldwide central bankers have too much power and that a crash is impossible?
I am the world's biggest proponent of closing the Federal Reserve. The Federal Reserve has no business to exist, either does the IMF. They have, for lack of a better word, effed up everything they have touched since the day they were created. And that's the fraud in the system. So they exist purely to help the banks survive. And that's the problem. In order to help the banks survive, you have to constantly pump money into them because they're not allowed to go bankrupt. Well, that's part of the fraud, and it's got to go. If you are a bank and you cannot make loans that you can get paid back from, then you don't deserve to be a bank. It's real simple. It's straight up business 101. So do they have too much power? Yes. However, if the fraud isn't eliminated, their power will disappear. So they could, because the system will blow. And then you have all sorts of civil strife. You have all sorts of problems. And history repeats itself. Can this be handled? Yeah, absolutely. In big chunks. Get rid of the school district bond debt. There's $5 trillion worth of bond fraud right there. It can be handled in big chunks, but it takes political will. And frankly, it takes intellect and lack of people getting kickbacks. So that's one of the reasons why we filed the criminal complaint, is to say, this is what's happening. Here's your evidence, DOJ. And we handed them the evidence.
I hope they get crushed, Mitch. I hope they get crushed. I mean, my God, we're trying so hard. We'll get to that at the end. Let's move on here to the mortgage aspect. I just wanted to respond, though, to this comment. What's the new executive order Trump just signed for housing prices to go down? I've been seeing some of these videos, YouTube videos, on how Trump is going to decrease prices of houses. And when I read that, I'm like, what the F, man? Like, why are you playing propaganda as well? Now, the thing is I don't know, to answer your question, because there's no math. He's just simply saying it. He's signing an order, but how are you going to do that? Right? Are you going to force Airbnb sellers to sell? Are you going to force institutional investors out of the housing market? How the hell are you going to do it? Right? You're cutting the grants, so you're not going to give them federal money, right? I don't know. We don't know the math, but right now I think it's propaganda until I see the math, because there's no math. Am I wrong? Did you see any math on that executive order, Mitch? Did I miss that?
It can't happen as long as the fraud is in the system. And it's gotten so insane. Argyle, Texas. Do you know that the average house worth $450,000 in Argyle, Texas has $343,000 in outstanding school district bond debt on it? So what's the real value of that house? Let's talk about Godley, Texas. I sent an email over to Helen Kerwin just a few days ago when I figured it out, that in 3.5 years, the outstanding school district bond debt in Godley, Texas will be greater than the $160,000 median home value in Godley, Texas.
That's crazy.
Yeah.
It needs to stop. Why can't we just get it to stop? Let's move on. I want to save some of that for the end here. All right. So we're going to move on to our first video. Let me do a timestamp on that video real quick. Now, our first video is going to be on consumer spending deteriorating due to tariffs. So nothing with the decades of corruption, greed, and fraud. Nothing about quantitative tightening for 3 years, the lack of PPP, the lack of EIDL or COVID programs or any of that. It's just because of the tariffs. And this is Wells Fargo saying this. So we're going to go into our first video. I'm going to mute us real quick, Mitch, right now. And you guys let me know that the audio is okay. Please, let me put this up and enjoy.
We'll soon start to take a bigger bite out of employment broadly, which spells rate cuts as early as June, and he still sees 3 this year. Jay Bryson is the chief economist at Wells Fargo. Jay, a not very happy note to bring you in on, but why do you think we're going to, the jobless claims, all that's still good. Where do you think the deterioration comes from?
So I think the deterioration, Kelly, is really going to come from consumer spending, right? And tariffs at the end of the day are going to raise prices. And what that does is it reduces or it erodes the growth in real income. So people have less growth in purchasing power, and that causes a real slowdown going forward in terms of consumer spending. And then again, some of this uncertainty right now as it relates to tariffs, if they're coming, if they're going, whatnot, that's not a really great outlook for business fixed investment spending either. So, we see just the domestic demand in the economy starting to decelerate as we move forward.
Both consumer and business driven. Steve, what do you think?
I'm trying to get past the uncertainty of what I want to know what's going through Mary Barra's head right now. And how is she figuring out what to do? We had a gentleman on earlier today that said it was going to take a year and a half to plan until you broke ground on the plant to bring it back. What I'm interested in is looking at the market cap of these companies. Look at Ford, look at GM. The market is not giving them any upside for sales or anything. So what interests me is you're asking these companies to do massive capital investment to bring back manufacturing to the United States. What have you done to their share price? Ergo, their cost of capital? You've raised it.
Well,
so you've made it harder for them to do that which you are asking them to do.
That's totally fair. But also, as we are saying when we introduced the subject a few minutes ago, they're not even the big 3 anymore. I mean, these companies had shriveled in market cap over do you know how upset Ford investors are? The shares have gone nowhere in like 20 years. So at that point, I don't know if another 8% on the margin or whatever the number is this year, it matters as much as how are they literally going to do this and have to make these big investments if that's the direction they go to bring big plants
I just don't think
here.
you made it any easier. What I was wondering is whether or not the Trump administration, maybe meet me over at camera 3 over here, would consider some kind of assistance to these car companies.
That's what I
whose market caps and financing you have made more difficult, the way you helped farmers back in 2016 and 17 when you tariffed their broccoli. Or actually it wasn't their broccoli.
Or look at the chip industry.
Soy.
I mean, how much a company like Intel, if it's important enough to U.S. security, then look at the handouts it's going to get.
I mean, if that's what you have to do, if you're going to get $100 billion in from the tariff side, maybe you want to funnel some of that back to the auto industry to make it possible for them to do the investments, sort of like a chip act for the car industry.
Jay, what do you think?
We just thought of this. We're making stuff up, Jay.
Well, yeah. I mean, right. So, but where does the money come, right? I mean, we know that we're looking potentially at a big extension of the tax cuts that we had in 2017. We don't have a lot of room here to play around with. And so maybe what you do is you use some of the tariff revenue and you recycle that back towards, as what Steve is talking about here. I mean, it's not going to be through an act of Congress in terms of the reconciliation bill. So it's going to have to maybe come from the tariff revenue.
But that's so ironic because if you use, first of all, if you get the tariff revenue, then people are not reshoring. So it's got to be one of them. But second of all, if you use the tariff revenue to subsidize the U.S. automakers, then you're not using it to pay down the deficit. And third of all, there's
Wait, Kelly, that's the problem.
Right.
What is the intention here?
But that's why the 10-year.
Is it revenue or is it onshoring or is it both?
But look at the 10-year. And this is telling us everything we need to know about how much restriction or austerity is coming down the pike. I don't think much is coming. There's a reason why there's rumors that Stefanik is not going to the UN anymore because the margin in the House is now too tight. And they have to do, Jay, to your point, they have to get the budget bill done just so that taxes don't go up at the end of the year.
Right. Yep. So the next few months are going to be really, really interesting as it comes to fiscal policy. I mean, we're starting to get a little bit more clarity right now, a little bit more in terms of trade policy, but fiscal policy, I think, is going to be the real, kind of wild card in.
Okay. I want to move on to the mortgage, but I want to get your comments. Was he just mentioning that the auto industry should get a bail? It frustrates me when these rich suits, they're always, yeah, let's bail my friends out. Let's bail this company out. Let's bail that. No, you let them fail. What the hell is wrong with these people? Were they talking about an auto bailout, which is what I've been personally warning people about, like, hey, if they do an auto bailout, we better freaking protest, man, because we already can't afford the deficit that they're doing right now. So what is your take on that absolute ridiculous video that we just watched, Mitch?
Economist without the benefit of intellect. I mean, bottom line is, Steve Leisman said one statement that actually was correct. We are making stuff up, Jay. That was the only thing he said that was actually correct. They're making it up. And the idea that you make a policy based on a fantasy is why we are in the mess that we are in. Supporting banks that need to go bankrupt is why we are in the mess that we are in. Supporting companies now, it's one thing if it's a national security issue, but that's not what we're talking about here. We're talking about doing bail-ins for companies. Well, either the math works to support that company to get an economic yield, or it doesn't. Get rid of the regulations that are drowning some of these companies, fix the system by getting rid of the fraud. And that's the one advantage, the biggest advantage of repealing the real estate tax in favor of the uniform state sales tax, because it puts everybody on the exact same playing field. That's what you do. What they're doing didn't work, doesn't work, and never will work. And that is why the system has been pumped up with trillions of dollars of printed money. They cannot keep printing. See, what happens when you print, you'll end up at the Weimar Republic, where literally it will take a wheelbarrow full of cash to go buy a loaf of bread. That happened at the Weimar Republic. It has happened in history. So they can't keep printing. That's why I keep saying this game is over. Recognize it, deal with it. If you want to keep the system and make the system work, you've got no choice but to deal with the elephant in the room, which is the debt. And it's the compound cumulative interest on the debt.
Well, I mean, mom and pop have to deal with debt. We pay it. We actually have to pay we don't get these forever amortization schedules. Not anymore. They used to with the interest-only mortgage programs. Let's move on to our mortgage segment now at the 27-minute mark. And there's a few things I want to go over with you guys in this segment. I'm going to go over the types of loans. Let me put that on the screen. I'm going to go over the types of loans. I'm going to remind you guys what pricing is as it pertains to interest rates. And then we're going to go into the amortization schedule. Few things that I want to say before going into this, though, just some tips I want you guys to remember. If you're wondering what a good FICO score is, like generally the best FICO score you can have for interest rates is generally 740, sometimes 760. And then after that, you really don't get a benefit in interest rate that really impacts your rate when it comes to conventional versus FHA. Conventional is a lot more dependent on FICO score and credit score versus FHA. Also, you guys shop your mortgage. First of all, I'm not saying to buy right now. It's one of the worst times, but if you are buying, and for the people that are out there doing that, make sure you shop your mortgage. You generally have a 4-week grace period when the first inquiry is ran on your credit. And I say that because you don't want to keep running inquiries. An inquiry can drop your credit score from 5 to 8 points. So understanding that there's a grace period for you to shop your mortgage is very important. Also, what's important to understand is generally a broker is cheaper than a direct lender. So usually, not all of the time, but most of the time, you're going to get a better deal on your interest rate and the closing costs with a broker versus a direct lender. So a few things I want to go over right here. On the upper left, the 6.76 is a conventional mortgage. So if you're doing what I'm saying, you're shopping, you guys, and you have a credit score, like high credit score, 740, 760, you guys should get roughly about a half a point lower than what you see here. So if you're doing the things that I'm saying, you should, it's not a guarantee, but you should be able to get like a 6.25. If you get an FHA should be in the 5%, high 5% right now. But I also wanted to point out that FHA, look at how much lower the rate is on FHA versus conventional. So FHA has a lower interest rate, and depending on your credit score and down payment, just depending on those things, it also has lower mortgage insurance. The only disadvantage for FHA versus conventional is the mortgage insurance. That's it. On conventional mortgages, there's options where you can avoid having mortgage insurance if you put 20% down. FHA, that will never happen unless you put 10% down and wait 11 years. So the only way you're getting mortgage insurance removed on FHA is you initially, so it has to be on the initial purchase, put 10% down, wait 11 years. So it is what it is. VA is sitting at 6.2, 15 years actually lower than the FHA. Usually it's not like that. Now, what I want to do, guys, okay, when I say a broker is cheaper, here's one thing that I mean. So everyone knows closing costs. Now, what I want to teach you guys real quick is pricing. So I want you guys to stop saying interest rate. Like, this is the interest rate that I can get. No, what I want to know is, what is the price of the interest rate? So interest rate and pricing is the same thing. So pricing means, what is the price of the interest rate? How much does the interest rate cost? And what you guys see right here, now this is a loan. This is what I was really, really good in as a loan officer. I would find pockets and windows where certain lenders would offer a lower pricing than other lenders to try to get a market share. But this is what a loan officer watches pretty much every day. It's on your screen right here. This is a rate table. And this rate table, and by the way, this is old. We don't have interest rates like this, but this is the only thing I can find on the web. Okay, so this is an old rate sheet. You cannot get a 3.5 right now unless it's a new build. Okay, so first understand that. But what I wanted to show you is how this works. So first thing I want to do is, let's talk about the interest rate right here that's in gray. Okay, so this is in gray. This is saying a 3.99%. Let me move that. So the interest rate is 3.99%. Now, depending on how long you lock this for, is going to change the price of the interest rate. If you lock an interest rate at 30 days, but the rates go down and you want a lower interest rate, you cannot get the low interest rate unless you bust the lock and wait 30 days or go with a new lender. So once you lock, you lock. Now, here's how to read this. Okay, so first of all, this 3.99%, if I locked on 30 days, so that's this column, if I lock that 3.99 on 30 days, that's going to cost me, depending on, so if the loan amount is 100,000, it's going to cost me 1.19 points. Okay, so if the loan amount's 100,000, that's going to cost me $1,190. Okay, because that's the price. So that's 1.1% of the loan amount. Now, what's interesting is if I can take a higher rate, if I decide to take a higher rate, so I can get a 3.99, it's going to cost me 1.1 points. But if I decide I want to take a higher rate, which I'm not saying you should do that, just saying how this works, and I lock on a 30-day, when it's in parentheses like this, that means I'm getting a rebate or I'm getting a refund for the bank for taking that higher interest rate. So in this scenario, I would get 0.399 back as a credit for my closing costs, because remember, the pricing is in addition to normal closing costs. So that's known as a rebate. This is known as a discount. Par rate is the interest rate that you can get for free, which sadly, you guys, in this market virtually does not exist. But remember, interest rates, pricing, same thing. This is what it looks like. And this is what changes every single day, sometimes multiple times per day. So this is what's changing. The actual interest rates are not changing every day. It is the pricing that is changing every single day. So remember that when you go to lock in your interest rate. And again, I look for patterns when I lock, when I used to lock. I don't do it anymore. Now, the amortization schedule. This is a death contract. If you guys do not pay your mortgage off, then there's no question about it. Don't buy a house. You're way better off renting. I'm saying, and I believe in buying. I've been bullish on the housing market for my entire life, except for the last 3 years. You got to pay this down. If you don't, your amortization schedule will last forever. And if you think it's a good idea to refinance, guess what? You start this whole thing over again. I want to show you how important it is to pay your loan off. So if you guys get a loan for $324,000, you get a conventional mortgage at 6.76. That $324,000 is going to take you $757,000 to pay off the way that it's amortized. Look at that. Isn't that insane? You got, that's more than double. So your total interest is $433,000 alone. Your principal is $324,000. And the reason that is because the schedule you see above our heads, this is called an amortization schedule. And this is front load. It should be illegal. It's not, but this is front loaded with interest. So you pay your interest before your principal. Why? So the banks can stay rich, of course, right? And the whole leveraged up game can continue. The mortgages are freaking awful. But I wanted to show you guys, if you guys just paid, say, $20,000 down, okay, and you put your balance, your principal to 304. So you start with a principal of 324. But if you make a lump sum payment of $20,000, you guys save 5 years on your mortgage, and you save you save about $120,000 in interest. All right. So if you have extra money, put a lump sum down on your mortgage. It will pay dividends. But if you also want to pay extra money per month, so if I paid, say, $400 extra per month, and you guys can do the same thing. You guys can go to an amortization schedule and start playing with this. But if I put $400 extra per month going towards only my principal, all right, let's see how much we save. Okay, so this goes from a 30-year loan to a 19-year and 5-month loan. So you're saving over 10 years. And let's see here, total amount in interest you're saving. If you just put $400, just $400, guys, you save 10 years and 175,000. I'm not giving you any financial advice, but hey, if I could save 175,000 in 10 years on my mortgage, that's maybe some advice I would take. Maybe, I don't know. But either way, you guys, that is our mortgage segment for today. Wanted to keep that very brief. And we're going to jump into this video on the housing market. But first, Mitch, question for you. All right. And I love that you've said this multiple times when I've asked you this question. But can you explain to the viewers right now, why is paying off your mortgage right now one of the best things you could do with your money? We constantly get questions like, hey, I got money. Where do I invest it? I'm like, invest in yourself, right? And you say invest in your mortgage. Why do you say that, Mitch? And why could be paying off your mortgage be one of the best things you can do?
What that spreadsheet that Travis just showed doesn't show you is that if you take that money, that $400 a month, and you look at it over a 17-year period, well, I'm investing, and I'm bringing it down. Well, that's actually creating a rate of return for you, for whoever is doing it. And that rate of return is around 4.2%. So why would you leave money sitting in a bank earning 4.2, 5%, whatever your CD happens to be earning, or your US Treasury, when you're actually paying down your mortgage, you're saving, give or take, 17 years off the timeline, and you're making what amounts over time to about a 4% yield on your money. That's really the right thing to do, is pay it down, because you're making money. You're making more money that way than, frankly, leaving it in the bank. And leaving cash in the bank is subject to other problems. Putting it in your house, you have a homestead. Your homestead for legal purposes can't be touched as long as the taxes are paid. So it just makes more sense to buy down the mortgage. And then, even from the standpoint of what makes a home in reality is economic stability. So you're paying it down. It ends up being your home. The taxes are something we're obviously all familiar with. We know what we're talking about. But to have an economically stable home means you have a healthy, happy home. That's the primary goal.
We forgot that, Mitch, because we're sold into an idea that in order to be happy, in order to be a man of my house, I got to buy a house. I got to live in a house that I own. Now, I think owning real estate is, my whole life I've been bullish on it. But again, there's, the math has got to add up. I've seen people get absolutely destroyed. Now, a quick question, and I want to move on to the housing market update, and I want to show the viewers how to access that. I'm going to access actually a live active MLS, and I'm going to show people that I found a home that has about $300,000 in wedge. It's crazy, but it's so overtaxed right now. It just doesn't cash flow. So I'll show them that. But I wanted to pull this up on the screen. Now, this is from Les, and hear me out here, Mitch. I know what you're thinking, but Les Hom, who has been with the channel a lot, and I believe he generally feels this way. So he's not looking at the math, right? He generally feels this way. He's not trolling. He's saying monthly payment is all that matters. It hurts me saying that. I've made courses explaining this in great detail on why he's 100% wrong and why price is always 99% of the time it's more important than payment. And there's several reasons why. But Les has heard me say that. He's not listening. I don't know if he's taken the course. I've explained this, but I want to see if you can explain it. And again, he really believes this. And he's not the only one, Mitch. A lot of consumers feel like if I can afford a payment, then I'm going to get this thing. And they don't look at the price. And that's a huge problem. Can you explain to Les, again, who's been with the channel supporting it for a while now, can you explain to him why he's dead wrong?
Markets go up, markets go down. If you buy a house that you overpaid for, or anything, real estate that you overpaid for, and the market goes down, your debt level stays constant. That combination means you will be destroyed. You will get hurt. So if the principal of your house goes down, the market goes down, your principal value of the house goes down, you go to sell that house. So let's put some math to it. You paid $200,000 for the house, and you bought it at the high end of the market, and you've got a 5.25% interest rate. So the 5.25 dictates your monthly payment. The problem is if you go to sell that house in 3 years or 5 years, and the market at that time is only 170,000 worth of value, well, you're 15% upside down that you will not get back. That's the danger of overpaying for anything in real estate and why the math is so important.
And I'm not saying that payment's not important. Payment is 100% important. That's why we have debt to income ratio guidelines for mortgages. So payment's important.
Well,
But
you,
when
you
someone's
look at the same thing on cars, right? So it's people who lease their cars and hand them back in.
Yeah.
Well, you're overpaying to have that lease so that the company doesn't have to take the economic risk of the devaluation of that vehicle. And that will happen. It's not if, it will.
okay, so I mean, and this is bonehead. I didn't know that was the name when I threw this comment up. So appropriate. If you're not selling the house, then price doesn't matter. So, oh my God, I can't even.
Well, it does. Watch this for a second. So
Go ahead,
if you
Mitch.
overbought the house for the sake of conversation and you, oh, I have to have the house. My wife wants this house. I'm going to get it.
Right.
High water. Okay. Well, now let's figure out on a 30-year AM how much that, let's just say that you overspent $40,000. Do you realize that on a 30-year RAM, that $40,000 is about $250,000? So the monthly payments do matter, but the principal matters more.
Right. Because here's the thing. When you've paid the price off, guess what happens to the payments? You don't have any.
Yeah.
Isn't that crazy how that works? So, I mean, it is what it is. But we appreciate you, but it does matter because what if you lose your job? What if you need to refinance? I mean, my God, then I'll sell someone my house right now for $1 million. I'll do seller financing at a 2 to 3%. I'll give you 3%. You know what? No, we're going to do an interest only. I'm going to give them 5% interest only. I'm going to sell my house for, I'll be generous, $800,000. As long as they can afford that payment, what's the price matter, right? You're going to be paying that off for your 2 lifetimes, but who cares? If you see, you can't think like that, buddy. You got to do the math, at least in my opinion. And speaking of math, let's move on to the housing market update. And I'm going to show you guys the math. Are we falling behind? Maybe a little bit. Now, this is going to be one of my favorite things to do. It's a little bit hard to do this though. For obvious reasons. Now, the first thing that I want to show you guys is remember, go to the Teachable right here. I was going to play that video, but I'm not going to do that anymore. You're going to go to the Teachable. You're going to download the subdivision analysis form. This is what the subdivision analysis form looks like. Let me remove this comment so they can see. All right, so I'm going to fill this out, and I'm only going to fill this out to calculate wedge, okay? But again, each and every one of you could do the same thing. If you're a realtor and you're listening to me and I haven't scared you off, for the love of God, use this form for every single one of your clients and take the course that I made. It's free on how to do a market analysis. You'd be helping a ton of people. But this is what I want to show you guys. I'm going to access the MLS now. Okay. Now look at this. Oh, hold on one second. Let me go to the matrix real quick. All right. So here's the matrix. So you have all of this ability to filter data. And right now there's something, I don't know, 30,000 listings or whatever in my area. But all I've done is instead of doing all of this, check this, check that. Like, I don't care about any of that because I only care about the math. This is all emotional BS right here. Like, I care about the math. So I just made my own fields. And if you're a realtor, you could do the same thing. And I added the field way down here. That's price per square foot. That's all I need. I don't need any of that other stuff. Just give me my price per square foot. Let me show you what happens when I put it in here. Now I go from like 30,000 active listings to 2,100 active listings. So let me show you guys the map. All right. So I don't want to look at 30,000 listings. I want to look at the listings that have wedge immediately. And that's what I've done by filtering this by price per square foot. Now I'm going to zoom in and we're going to do an individual analysis. So I'm going to zoom in here. You guys know I like looking at Kingwood. Here's Kingwood right here. And let's do one. Oh my God, I found this house. You guys are going to freak out. All right. So let's do an analysis on this house. Let me first show you what we're working with. Okay. This one is crazy, mate. You guys are going to freak out when I show you how much wedge this and this is a nice house. This has a pool. This is an overbuilt house. But right now this house is for sale for $620,000. The current price per square foot is $112. The subdivision, remember, we're going to take note, is Foster's Mill Village. So the only thing I care about is that Foster's Mill Village. So I'm going to paste that up here. Okay. I'm going to do a 1-year analysis right here. I'm just going to put 123 Main Street right here. And the purchase price was $620. We could probably get that for lower because it's been on the market a long time. Okay, so I put 620 there. Let's get the size of the house one more time. The size of the house, oh my gosh, look at that, 5,489. I love this house. I can't afford this house. I love this house. I just can't afford this house. I don't want to clean it either. Okay, so that's, what was it, 5,480, was it? 89, okay, 89. All right, so that's what I have so far. I'm going to get the taxes real quick on this. Now, remember, you guys, so this is for sale on active market for 620. Look at the taxes. This whole neighborhood is overtaxed, by the way. I looked at this neighborhood. It's freaking horrible. So the county has given us a market value and assessment value of 813. So you guys see the issue here. They've overassessed this house by 200,000. You guys understand that? This is over 200,000 overassessed. But regardless, the tax rate is $19,000 per year. So you buy this house, your taxes are going to be $19,032. I'm going to go back here. Let's put $19,032. So what I need to do now is I have to figure out what the market price per square foot is. So the way I'm going to do that is I'm going to go back to the original screen. I'm going to go back to search, and we're going to look in that subject properties subdivision. And that's going to be really easy. I just paste the subdivision here, and I want to look at sold property, not active, and I want to look at the property for the last year. Okay. That's going to give me 7 comps. Let me show you guys the results. So here's all 7 comps. I'm going to select all of this right here. I'm going to eliminate the smaller houses because it's a huge house. I'm going to remove this one and this one. Oh, man, that's just such a big house. It's hard. It's really hard. All right, I'll just leave these 5 comps. I'm going to go to stats right here. And then I'm going to hit tabular to get the average price per square foot over the last year. Now, obviously, guys, this is an extreme situation. So the average price per square foot is $178.87. I'm going to go back here. I'm going to put $178.87. So now what I got to do is I got to calculate my wedge. And by the way, I already know this house is under market value. It's just no one can afford to buy it. But let me show you how much the wedge is real quick. Okay, so all you do is you take the current size of the house, which is 5,489, and you multiply that by the market price per square foot, which we just calculated here. I have a course on this. You guys can go back and take the course. So let me multiply that by 178. Everyone sit down, sit down. This is going to be a lot of money. Okay, that's 981,000 minus the sales price of 620. Sit down, Mitch. You can't have this house. Sit down, okay? Minus 620,000 equals, holy shit. Oh my gosh, I can't believe I said that on live. There's wedge in this house, okay? $361,000. 361, 817,000. That's your gross wedge. Isn't that freaking crazy? So if you guys want to learn how to do this, that's how you do this. Again, I have a class on this. Here's, I would calculate how much the mortgage payment would be, but just take that class. I don't want to go on for too long on the housing market update. And the next thing I want to do real quick, and then we're going to go into the last segment, which is the property tax segment. I want you guys to listen to this video on sales. So February pending home sales are up slightly. Notice the key word here, not sales, pending sales. So the transactions haven't even closed yet. So anyways, listen to this and then we will end this sucker out. And I hope that was helpful, by the way, that housing market update for you guys. So let's go into our video now. And if you guys can, let me know that the audio is good.
Let's get some pending home sales out a couple of moments ago with Diana Olick. Morning, Diana.
Morning, Carl. Pending home sales in February rose 2% month to month. The street was looking for a 1% gain. But just for context, January was the lowest read on record for this index. So now we're 2% higher than that. Sales were 3.6% lower than February of last year, all according to the realtors. Now, this count is based on signed contracts. So people out shopping and inking deals when the average rate on the 30-year fixed was dropping from just over 7% to 6.75%. It is at 6.8% today. Regionally, pending sales were higher in the South and Midwest, lower in the Northeast and West. The West is at the weakest level. Of course, that is where home prices are the highest. But back to that national sales picture, I just want to mention sales were significantly lower than a year ago, despite the fact that the supply of homes for sale is up nearly 28% from a year ago. The problem is both affordability and uncertainty over the broader economy and employment. We've also seen personal debt levels rise, which of course makes qualifying for a mortgage even harder. Sarah?
Okay, Diana, thank you very much.
Okay, Mitch, I had to, let me put this on pause. This threw me off a little bit here. I had to edit your name, buddy. Your name is not spelled correctly. Don't worry, I got it for you. I could do it on my end. There's an L in there. Holy moly. All right, I just changed it. Now your name should be good. I can't see your name anymore, but all right. So we're going to move on now. Let me do another timestamp at the 50-minute mark. And Mitch, I want you to, talk about this. Let's spend maybe a few moments on this. But we're going to give you guys a full update on the property taxes and basically eliminating property taxes. We've come up with several courses and several digital documents on how to end property taxes. Multiple different fronts. So it's not just one thing that we're doing. So I want to talk to Mitch about basically five things. Number one, because again, it's all hands on deck, right? Number one, his bill. He actually got a bill in. I want to know the status on that. He knows the status on other bills in Texas and, across the nation to eliminate property taxes. Number two, I want Mitch to give us the current status on his lawsuit. You guys know that he has a lawsuit basically trying to prove, mathematically actually proving that it's fraud, and that the property taxes are unconstitutional and violate several state laws as well. Then we're going to go into the criminal complaint and see what the status is on the criminal complaint. And number four, this is really important. You guys listen to me. If you guys own property, number four is, and I've made a course on this. I provided you guys a form. We need to protest our values right now. And the first thing that you need to do after you initiate the protest is you need to get something called the grid. Okay, the grid is the Central Appraisal District's evidence. So the grid is how they come up with your value. So again, step one, protest. Step two, get the grid. Why do we need the grid? Because we need to see how they're coming up with the value. Okay. And then the fifth thing is we're going to talk to you guys about a new Discord that we're creating, and we need your help. I'm going to read you guys some of the channels that we're creating because we need moderators, you guys. We want to build a community that's ran by a community of people that are helping each other. So we're going to go over all those things. But Mitch, let's start with briefly, take as long as you want. What's the status on the bill and bills like yours that are supposed to end property taxes here in Texas?
Well, there are other bills that have been floated over a series of years, including this year. The truth is they're all garbage. And the reason they're garbage is because they don't solve the problem. What they do is they allow the school districts to create other taxes. And none of this is going to work. These school districts must go to zero debt. That is the only solution. And you get there by eliminating the real estate tax in favor of the uniform state sales tax, so that no school district can ever raise 10 cents worth of bonds. They cannot be trusted. They've done it. It didn't work. It failed. All the people that promoted it have failed. The leadership has failed. The school superintendents failed. They know what they did. They cannot not know what they did. And that is, in reality, what happened to me is that we put the bill forward that said repeal the real estate tax in favor of the uniform state sales tax. It is the only solution. Nobody has been able to come up with anything that says it's wrong, it isn't going to work. It is the only solution. With that said, the legal department, which is called LEDGE at the state of Texas on behalf of the House of Representatives, found it in their infinite wisdom, and I'm being smart ass when I say that they did not like something that was in the bill. And what they deleted was that as part of the bill, the school districts had to come clean. They had to provide a sources and uses. They had to provide a bond schedule, which is required in law anyway. So the point is that the attorneys, A, don't know anything about math, B, are doing extremely bad lawyering, C, have set the wheels in motion for this current legislature to fail. And I was told, well, we're going to put your bill back up. I said, $1 late, $1 short. Doesn't work. Well, at the same time that was happening, we found out that the Bond Review Board, which Governor Abbott is the chairman of, which is the government division, turns out that they were short roughly $24 billion worth of debt that was outstanding. So we looked at it, and we found, somebody we're dealing with found a website through the Texas Education Agency that had more accurate information. Well, a $24 billion delta is a huge gap, and that raises all sorts of questions. So that both of those things were happening at the same time. So I said, okay, there's a $24 billion problem here that we didn't know anything about. Now we've got to address that. And now we've got the evidence of ledge at the state of Texas on behalf of the House Ways and Means Committee interfering, literally interfering with the bill. And by the way, I told them, if you're going to run forward with this, take my name off of it. I'll have nothing to do with you. So because those things were happening at the same time, I ended up creating the First Amendment to the criminal complaint. And in that First Amendment to the criminal complaint, we laid out the bill. We restated the bill. This is the solution. There is no other solution. This is what they did. We named the names. Then, because of the Bond Review Board issues, we stated, okay, why is Governor Abbott in charge of the Bond Review Board? And why is there a $24 billion bust in their numbers? And then we also looked at all the outstanding debt on a per house basis on several districts, roughly 30 districts across the state of Texas. There's like 1,040 of them. So this is just a handful. But the point was, then we named the school superintendents for those districts. We named the chief appraisers for those districts. We named the boards of the school districts, and we named the boards of the appraisal districts.
But not in your bill, right?
It's not in the bill. It's in the First Amendment to the criminal complaint.
I want to get there.
We put the bill back in it. Yeah.
Right. I want to get there, but I want people to understand each segment, so I don't want to mix them. So let me pause real quick and let me reiterate what you said about the bill. So Mitch pretty much single-handedly wrote a bill for the state of Texas and the House of Reps for the state of Texas. That bill was sent into a department called Ledge. Ledge's job is to take any bill and make it fraudulent. And so that's what they did to Mitch's bill. It came out, Mitch was like, no, you're not going to put my name on this bill because all you did is figured out a way to swindle the taxpayer. So the bill essentially was pulled. There's a couple other bills in the House right now, and they've done nothing with those bills. I think some of those bills to eliminate property tax they've been trying to eliminate it for a very long time. They're not able to successfully do that. You're saying that the bill that you're working on has the math. We're able to prove that there are solutions in your bill to eliminating the property taxes and still fund the schools. And at this point, we've kind of hit a dead end on the bill, which brings me to the second thing. I'm gonna skip. I was gonna go into your current lawsuit, but since we've already started talking about, let's go into the criminal complaint. So, which is what you're talking about. So the bill, we may have to wait till next year to push that again. The criminal complaint is active now. You've included the bill in the criminal complaint. You've added an amendment to the criminal complaint. Can you tell us the status on your criminal complaint, Mitch? And has any enforcement agency, someone asked to Pan Bondi, it's on the screen here, has any enforcement agency reached out to you about these criminal complaints?
Yes. Last Thursday, last Thursday, an attorney from the SEC reached out and said, would you and Mr. Mashburn please onboard your documents to our system? And between Jeff and I, that took about 5 hours worth of effort, but we got it done. So that was pretty interesting. And he's an attorney for the SEC. He's a person who's responsible for putting accountants in jail at another school district here in Texas for embezzlement. So this guy understands what's going on. We'll see where that goes. So yeah, the SEC's got it. The DOJ has it. And as we've said, by the way, in the criminal complaint, we said, if any person in the government who's named in this criminal complaint believes that anything we've said is inaccurate, go ahead and state so. We gave them 15 days. So that day is up, I believe, tomorrow. Okay. And they can't, because we have their evidence. It's government documents, it's government audio, it's government video, it's their testimony. We have them on depositions. We haven't said anything wrong. Well, if everything that's in that document is accurate, then the ultimate question is, why are we having this conversation given the fact that so many laws have been violated? And that gets even deeper, which is why we've got the amended criminal complaint.
Mitch, can you tell the viewers, and for the viewers, this is the digital download on the Empowerment Center. You guys could use this criminal complaint as well. If you have an attorney, you can give that to your attorneys. Mitch, how many people have reached out to file their own criminal complaint?
As far as I know, there's probably 12 or 14 that are working across the United States right now. These are people that have what I would call a smaller version of a criminal complaint for their states. They've taken the time to go get their state laws and put it together. They'll probably end up, I've seen one of the complaints, he's at about 42 pages. The vast majority of them probably end up at about 6 pages, which is pretty reasonable and pretty easy to do. But they've got their laws. They've got a bit of a background in it. They understand what's happening. Over and above that, I'm not sure, Travis, if you've got the first amended criminal complaint up there, but every property owner should read that First Amendment to the criminal complaint, because it's an easier read than the original criminal complaint, because the original criminal complaint had about 15 pages of pure laws that were being broken. There was no reason to be duplicative, so we took it out, and that made the First Amendment to the criminal complaint much easier to read.
All right, I'm going to pull up. I want to show them this in a minute, but let me set this up. But as I'm setting this up, can you give them the status on your current lawsuit? And I think you've had this lawsuit going for what, about 9 months now, maybe 8-9 months. Can you give us the status on your multiple lawsuits?
That lawsuit's at the Fort Worth Court of Appeals, and all that's going to happen there is that I suspect they will kick it back to the original judge who punted. That's going to happen. So we end up back in the original court. All that's happened is a huge delay and more money being spent for no particular reason, because nothing changed. The laws are being broken. The chief appraiser is guilty. He is the party responsible in law. So when you understand all this, all it was a giant delay, a delay tactic. Their theory is, well, we'll just make them go away. Well, yeah, I'm not going away. And the citizens of the United States of America who are being overtaxed aren't going away either.
Yeah, unfortunately, Congress isn't going away either. And they made a comment right here: Congress is useless. Yeah, they are useless. Now, let me go to the fourth thing, which is the protest. So if you're a property owner, you're going to want to protest the value. Let me show you guys real quick. So when you go to the Empowerment Center, this is an absolute freaking beast course I made right here. You're going to want to take the Fight Property Tax course. This is the course right here that I made that actually teaches you, okay, what is property tax? First of all, what does it go to, and how are they calculating the property tax? How does mortgage work? It talks about property tax homesteads. I mean, look at this. I got 9 chapters on property tax homesteads. Holy smokes. I didn't realize I did all this. How to start the protest, which is right here. The grid, it has the documents that you need. I made you guys a form to use. I call it a protest form. It's right here, complete protest form. So, I mean, it's all here, guys. And again, you can go back here. This one's how to end property taxes. This is how to buy houses. Now, this is my newest course right here. This is what I just showed you as far as how to use the math to find the deal. That's called how to do a market analysis. All of this stuff is free. And I want to move on now to the last thing, Mitch. And maybe you can discuss why you think this is a good idea. But I want to move on to talking to you guys about Discord. And I want to reach out and I want to plead with you guys to help us do that. Mitch and I are just one person. We're finding it very difficult to find people to help us nurture a community and help empower a community. So we're working on a new Discord, and I'm going to go over some of the topics that we're going to cover. And if you can, as I'm going over these topics, just comment below if that's something that you're interested in. And let us know if you're willing to be a moderator for a Discord. Now, the Discord is different from what's already existing that Trey made. This is going to be a more professional Discord where we're going to ask people not to get crazy. The other Discord, man, I mean, every once in a while there's a psychopath that comes on and absolutely tries to slam me. And I'm like, dude, what's this psychopath's problem? Like, for real? Like, why are you here right now? So anyways, it's just a way to help conquer the apathy and to bring us together. Mitch, why do you feel like a Discord is necessary?
There are thousands of people who have literally lost their homes over all this problem. And there will be thousands more we're getting emails every 15 to 20 minutes round the clock from across the United States and some from Canada. And I believe there are people that have similarities, such as, well, I'm going to lose my house because I have a pending foreclosure. Well, you're really quite a ways down the road to the problem. And there are solutions, which would be Chapter 11, but people don't know what those solutions are. So one of the categories that we came up with literally says pending foreclosure or pending litigation, appraisal review board process. So we've broken it down into segments, and each segment has similarities between each person who is sending in these emails. And there's been hundreds of emails. There's thousands of people that have signed the petition. There's thousands of people that are getting into these courses. The Discord, if we can train people who have been through the process or who are up to speed with what it is that we're speaking about, well, that's mom and pop helping mom and pop. And there is no other facility that we know of. We looked, we couldn't find it, that is doing this. And the goal, mom and pop helping mom and pop, gives scale to be able to help an awful lot of people. We've done all the research. We've done all the what's necessary to be done on the litigation side, filing the criminal complaints. We've got the math. Now it's a matter of teaching everybody, okay, here's the math. It's simplified. We've created the bucket or silo or funnel, call it whatever you want. So if you've got a pending litigation and there's 30 or 40 people, and then that moderator says, okay, we can do this, and we'll start building the documents in behind. So here's the label, here's the funnel, and here's a handful of documents for everybody to read. And then people can start talking and communicating with each other. Now you've got an ability to get a lot of these problems and help these people out and make those problems go away as best we can.
And what I'm going to do now is I want to go over the channels, and I want you guys to comment below on every single one I go over if it's something that you feel like you should be learning about. And also, again, you guys listen to what I'm saying. Let us know if you could be moderators. I want you to do me a favor. If you think you could be a moderator, email Mitch. Mitch's email is going to be in the description. Email Mitch and tell him that I have 5,915 emails. I have 5,915 emails right now. I'm so sorry, guys. I'm not going to be answering all those emails or even half of them. I've given up. But either way, we need your help. And unfortunately, you guys, I'm also trapped as I'm enslaved in the system as well. I have to, unfortunately, keep producing videos just to afford to live and to afford to pay for my family. If I wasn't trapped and I had the ability to save, I would be able to spend a lot more time on the community aspect of what we're doing. But again, I'm just like you guys. I'm not rich and I'm struggling myself. So I'm going to read some of these right now for you guys. Okay. Again, let us know if this is something you want to hear about, and let us know if you could be a moderator on Discord. So the first one is pending foreclosures for single family, pending foreclosures on commercial properties, determining proper comparisons. That's the market analysis. Okay. That's like maybe more for realtors, seniors with substantial increase in property taxes. So we want to have a channel that helps specifically seniors that are property owners that are getting bamboozled by property taxes. Like, how do we help the seniors? They need help. Appraisal review board. So that's like the process of protesting your taxes. I already have courses on that. You guys already know that. Pending litigation, all ads, same thing. Criminal complaint is one. Another one is the energy contracts. I'm sure Jeff would love to do that. Single family homeowners, multifamily homeowners, retail, industrial homeowners. The reason why we're covering so many different property owners is Mitch is an expert in these things. We want to talk about property insurance. We want to talk about real estate investors, large scale, medium, and small. Once things start to crumble, Mitch and I are going to be doing a lot more analysis on real estate. And that's primarily commercial real estate. So we want to show you guys, hey, we just found a commercial property that's 40 cents on the dollar or 30 cents on the dollar, and it's really easy to make this thing cash flow. Oh my gosh. Oh my gosh. Do you know who this is? Do you know who Orlando Minor is, Mitch? This is my I love Orlando. This is my man right here. There's no other person Oh, I see your logo, P Nice. That's funny. There's no other person that has helped me more on YouTube than Orlando Minor has helped me. This is a great father. This is a great husband. I absolutely love Orlando and how he's able to tell a story. Good morning, Orlando. It's an absolute pleasure to see you, my friend, and thank you for all the help. Let me keep going here. So real estate investors, debt workout for commercial properties. That's something that Mitch specializes in, is the workout of these commercial properties. Also, uniform states sales tax. So pushing the property taxes and ending that. We'll do some consulting success stories. But again, you guys, we need to hear back from you, because we need to design something around you guys and around what you guys need. And Mitch and I are just one person. We may not be thinking of a whole bunch of stuff that you guys want to know about. So email us. What do you want to know on Discord? And are you willing to be a moderator? And absolutely, and other than that, I think we're ready to end this out here. Mitch, do you have any final words? Maybe I'll throw up some questions. If not,
To have a healthy, happy home environment takes economic stability. And the thought process with the Discord, well, our entire thought process for everything we're doing is really about that issue. But there are so many people that want to be part of a community to help others. That's become clear in all the emails that I'm getting. Like I said, every 15 or 20 minutes, there's one rolling through here. So there's a common thread. Now we have to figure out how to leverage that common thread to help everybody. That's what we have to do. And that's what needs to be done. Nobody's doing it, which is the other reason why it needs to be done.
and I had a couple people ask for your email. I just put his email in the description. Holy smokes, something just glitched. I just put his email. It's right here. So I'll put the email in the description as soon as this is over as well, so you guys can email him. And I really appreciate you guys. Don't forget to like this video, comment on the video, share the video, and definitely come back to the video. But let's look at futures and let's see what that's looking like right now. I'm gonna refresh the screen real quick. Oh my gosh, it's not looking good. It's not looking good, my friend. So the futures are looking in dire shape right here. S&P 500 down 48.75, Dow 247, NASDAQ 236. Let's see what the VIX is doing real quick. If that went up anymore. Yeah, it went down a little bit. Let's see what gold's doing. Oh, is that a new high? Yeah, it hit a new high. Okay, so gold hit a new high. It's down off of it. It hit $3,160. So gold did hit a new high. Last question, Mitch. Is it too late to buy gold, silver, and copper? Because last time you said buy copper by the truckloads, that's up 40%. Mitch, why didn't we take all of our money and dump it in copper, man? Don't you got the trucks? Let's go get some copper.
Like I said, though, the biggest problem with copper is you've got to be able to store it. So even if you buy it by the semi-load, you got to get it off the semi, which means you need a forklift. It's not easy to handle. And yes, it did run because it's a commodity. Is it too late to buy gold and silver or platinum? You'd be better off right now today buying platinum than you would gold or silver. But on pullbacks, absolutely. At some point, silver will start to outpace gold. And that's just what it normally does based on the gold-silver ratio, which I think is hovering around 90 today. And there's been history where it's 15. So it's to be able to say that silver, it could go up 15x is not without possibility. It's quite possible. So, but you would kind of want to wait for a bit of a pullback. I mean, this stuff is certainly up there in price at the moment.
Yeah, it's close to new high. Silver's at 34.79, so very, very close. Dang it. I mean, just some last quick questions real quick. Dang it. I know I say, oh, just one more question, but they just keep throwing like really important stuff at us. They're asking if it's a good idea to purchase real estate on a promissory note. Let me just knock this out. It depends on the math, right? Like if someone's willing to sell me a house with private financing and just a promissory note, and then yes, right, if the numbers are good, low interest rate. But if you're taking a promissory note and keeping it like the sub 2 culture, and the bank doesn't know that you just took that note, no, you shouldn't do that, because they have an acceleration clause and it's fraud. And Pace Morby teaches fraud. I literally have seen a video where he tries to explain to people how to commit mortgage fraud, and I don't know how that guy's not been arrested. That guy's an absolute pig. He's disgusting. He's manipulating people. He's not explaining the disaster that can happen if the lenders find out about those promissory notes. So it just depends, Sean. In other words, I didn't mean to go too hard there. Let me just throw up this real quick. Okay, if Trump wanted to do anything about homes or loans, he'd do something with the government programs, but they want things high, I think. I don't know why I put that up. At the time, I knew why. God listens to these people beg for more welfare for companies that have offshore all their. I mean, this is just saying don't bail anyone out. Like mom and pop matter, not these losers. Prices of homes are locked by manifold reasons, but the most egregious is the FHA loan abuse. I agree.
Oh,
A
egregious.
DTI,
Yeah.
egregious. Sorry, a DTI 56%, and then subsidizing to prevent foreclosures. It is appalling, and not only is that appalling, they were never supposed to go to 56% to begin with. There's literally probably close to a decade of mortgage fraud because FHA immediately went, and it's not 56, it's 56.99. So basically 57. They were never supposed to do that. How did they get away with that? Fannie Mae allowed it. How? They kept buying, and Freddie Mac, they kept buying the loans. If they would just stop buying the fraudulent loans, we wouldn't have this problem. Now, I'm not going to say that the loans are worse than the subprime collapse because they're not. All right. They're not. Anytime like the subprime in 2008, anytime you can go to a lender and say, hey, I make $250,000 a month. And the lender's like, oh, okay, we don't have to prove that. Here's 100% financing. That's really bad. So we don't have that today. But what we do have is we have people that are in homes that can't afford them. And it's not necessarily because of the interest rate or adjustable mortgages, property tax, insurance, new homes, all of these reasons. So, and 56.99% debt to income ratio. Imagine if you had a 57% debt to income ratio and you purchased a house in 2021. How much are your property taxes, homeowners insurance, and HOA now? You got bamboozled and blindsided, and your real debt to income ratio is probably more like 70%. These are bad loans that we have right now. I'm not saying they're good loans.
Well, there's another issue there too.
What is it?
So the 28% DTI, which would be the normal course of business, really should be 28% minus the annual cost of inflation. It's not, in other words, it needs to be the exact opposite of what the world thinks it is. And that's the problem.
A really good point.
You end up with leverage. And
That's a good point.
leverage, if you don't know how to handle leverage, you're the pawn.
Now, it's such a good point. Yeah, because they're not accounting inflation. We haven't even talked about inflation, right? We're just talking about property. Oh my God, it's just, I feel really bad for people, including myself. I don't want to be a slave anymore, Mitch. All right, the last time I looked, the debt clock had unfunded liabilities at 220 trillion. Just want to throw that comment up so you guys remember the hidden debt, which is the unfunded liabilities. Remember that. Last comment. Okay, last comment for you, Mitch. Back in the day, I used to listen to Dan Patrick's radio show in Houston, and he always is complaining about property taxes in Katy. There was a comment saying that we should reach out to Dan Patrick. Do you know who that is?
Yes.
Ooh, that did. I can sense in your voice that maybe you have something to say about Dan Patrick. So should we team up with him, or what do you think?
Actually, they know who I am. They know what we're doing. They're in the criminal complaint.
Uh-oh. Is it a good thing?
No, we're not hiding anything. Look, this is what you have done. You are the executive branch, and he's Lieutenant Governor, Ken Paxton, Attorney General, Glenn Hagar, State Comptroller, Governor Abbott, Governor. They're in the criminal complaint. This is what you've done. This is on your watch. You did this. We have the history on Governor Abbott going back to 2006. They can say, well, we didn't know, we weren't aware. They can say whatever they want. The problem is the documents don't back them up. The fraud has been allowed to be created in their tenure. What the DOJ does about it, I don't know. But the facts are the facts. The bond fraud is the bond fraud. And if they wanted to do something, first thing, call Ledge, because they could get that bill back up on the floor immediately. They could call an emergency session. If you want to do something, get off your ass and do it.
Well,
the problem is you don't hear anything from them because they'd have to admit we failed. And that's fine. Admit that you failed, but at least do something for the benefit of your constituents. Failing twice over isn't acceptable.
Well, I'm going to tell you what I've learned from this fight, your bill, your criminal complaint, your lawsuits. if we as the people allow the politicians to leave out of the back door, which is to kick the can down the road, pass the buck, not take responsibility for what's happened, they will 100% do that. They are experts at going out the back door and kicking the can down the road. What needs to happen, in my opinion, the only way we're going to get this done, and Jeff does not share this opinion with me, we got to conquer the apathy, which means everyone that's watching right now, we need to get together, and we need to hold the politicians accountable, and we need to demand things. And if we don't get those things, then we need to hold the elected officials responsible. And by the way, if there's any elected officials watching this video, email Mitch, email myself, and we'll team up with you 100%. If you guys want to eliminate property taxes, you're a politician, even though I have my own opinions about politicians, freaking email us right now, because we will drive out to you and we will make sure you're on the team and people know that. Okay.
Yeah, and that
All right.
includes Governor Abbott. That includes the executive branch. I've called them out. I've said, this is what you've done. Does it do any good to put them in jail? It's not my job. All I can do is say, these are the laws that are broken. But if you're sincere about it and you truly want to fix it, Governor Abbott can fix this. He's talked about this before. Now, Governor DeSantis has come online and said, yes, we have to do this. Okay, stop yipping and yapping and do it. I've given you the bill. I literally showed you exactly the path to make this happen. And there is no alternative. If anybody's got an alternative, you look at that bill and you tell me what that alternative is, but you can't. That's the point. The solution is on the table. It's locked, loaded, ready to go. And Ledge stopped it from moving forward.
And what I'm also saying is part of the solution. What's solution? Part of the solution. It's the people that are watching, man.
Yeah.
It's the people that are watching. I mean, if we just have 0.1% of the people that are watching be proactive with us, I mean, we'll make this happen. 1%. We just need 1% of you guys to join us on this fight. That's it. That's all we really need. But if you don't have time, whatever, just protest the value. I'm going to get him out of here. Happy Monday. You guys have a great week. Our next video is going to be out tomorrow morning. That's going to be on the mass teacher layoffs. One more time, you guys, comment below, share the video, like the video, and email us if you want to be part of the Discord and you want to be a moderator. And from the bottom of my heart, I love you guys. I appreciate you. You guys are important, and so is your decisions. Don't use your emotions. Use the math as always. And obviously, you guys, if you're out there investing in real estate, you guys already know we wish you luck, and we hope you win.